Welcome to Inside the Issues. My name is Amrit Singh. The LA fires, the aftermath, the rebuild, they're never far from our minds, but especially this week as we look back on 6 months since January 7th. We'll never be able to put numbers or maths to the lives or the memories or the landmarks that we lost in the fire, but as a rebuilding does take root, the debate and the lawsuits and the complaints around the home insurance industry all pick up. That's led to increased pressure on State Farm, the largest property insurer in California. In an unprecedented move, the company received approval from the state in May to significantly raise its rates on an emergency interim basis. Jimmy Kennedy takes us into it.
It's just basically all new material.
The all-new material homeowner Sean Brower is referring to is on his new fire-resistant roof, a requirement, he says, from his former insurer State Farm for a chance at renewal.
To the tune of $40,000 to re-roof the entire property. And then a couple months later, we received a notification from State Farm telling us that they were dropping us.
Sean says State Farm at the beginning of the year told him even with the new roof and other wildfire management efforts due to his home in a high-severity fire zone in the Sierra foothills, that was the reason they wouldn't be renewing his policy.
We've been a customer since 2020. And I just got apologies and, sorry.
State Farm, California's largest home insurer, agreed in May not to drop any customers for the remainder of the year after getting an emergency rate hike tied to LA fire payouts. The company says it's paid over $4.2 billion to victims. As of the end of June, the Department of Insurance is now investigating State Farm over its handling of claims following numerous complaints. A positive step, says consumer watchdog president Jamie Court.
The market conduct exams do look into how the companies have handled their claims. The problem is they often take a long time. I'm talking like years.
At the end of June, State Farm posted they are cooperating with the Department of Insurance and will comply with the market conduct exam process. A fair review will find that thousands of State Farm customers are being helped by our teams on the ground in Los Angeles County and are very satisfied. At the centre of complaints is smoke damage, Jamie says, and whether insurers are legally obligated to pay or not for a house to be free of toxins left by the smoke.
There are conflicting court decisions on what the obligations of the insurance companies are. And we're trying to get one statement from the court that smoke damage is fire damage and the public needs to be paid for all smoke damage claims.
The State Department of Insurance says it has formed a task force to look into setting a smoke damage standard. Having lived in Malibu for years and knowing people impacted by the LA fires, Sean says he sympathises with those rebuilding and offers this advice for anyone struggling with their home insurance.
I got a lot of really good feedback on social media because there's a lot of my neighbors in our community deal with this.
He says the community feedback helped him secure new insurance and that in tough times, coming together is an invaluable resource.
And in these tough times, we see an insurance industry and homeowners in distress and under duress. And here to speak some truth to all of that, hopefully, is insurance agent and industry expert Karl Susman. Karl, thanks for being back on the show.
Thank you.
It does feel there's always these piecemeal developments with all of this, but it still feels like it's a bundle of a mess when it comes to industry and insurance and beyond in California.
For sure. I mean, we're still trying to get back to some semblance of normalcy. And where is that? We don't know yet, because we're coming from a place where we've been underpaying for the actual risk we have for such a long time. And then we get hit with a loss like this. And all of a sudden, where's the money coming from, right? Yeah. So we have to stand by, wait for some of these things to play out before I think we get anywhere.
So where's the money coming from? When is it coming? Those are the questions that many survivors of the Palisades and Eaton Fire are asking. The Eaton Fire Survivors Network has said they're getting delays and denials, and we've seen some reporting now 70-75% of the survivors from that fire don't have the numbers of the Palisades fire, but imagine something similar, saying that they're just not getting that money. This is about State Farm, this is about the FAIR Plan, this is about smoke damage and lawsuits and the insurance commissioner. We can get through all of that to the extent we can. Just talk about what we're seeing when it comes to the fact that people aren't getting this money.
Well, there's a lot of different moving parts, but I think what we're seeing holistically is we're not getting the response from FAIR Plan that we would expect. Okay. We're not getting the response from State Farm that we would expect. And these actions that are being taken to correct that are numerous. Mm-hmm. First, we have the Department of Insurance that came out and told State Farm, you're in violation, you need to correct your language. I'm sorry, Fair Plan. Your policy is in violation of the language for smoke damage. You must correct this.
There was also a lawsuit on that. That's the
Well,
same thing.
they didn't do it based on just the Department of Insurance.
Right.
So yes, then the attorneys got involved, they sued, and there was a lawsuit, and the court upheld the same thing. They said, yeah, that's not okay. So now we have, not only do we have the Department of Insurance and regulators telling Fair Plan what must be done, now we have the legal system behind it.
Yeah.
So I think now Fair Plan is going to step up because they have no choice. Everybody is telling them what they have to do.
Now, while we're talking about the Fair Plan, before we talk about State Farm, which is the state's largest insurer, we're talking about now the Fair Plan, which is the insurer of last resort. The default, the fallback, and the roll has increased, and a lot of people have said, hey, that's tough, that might be unsustainable, and now we have this huge catastrophe, and people are seeing that, right? So there's this new legislation, AB 226, the Fair Plan Stabilization Act, because we think, is it solvent? Can it be solvent? Do the reserves back up? And I know that's overly simplistic, but do the reserves back up the payments and the liabilities? Talk about this act and how it might affect that.
Well, AB 226 is designed to put immediate money where it's needed the most. So you've got Fair Plan has money in the bank, and if they don't have enough, boom, they can call out bonds, they can take out loans, they can take out credit lines. They have access to lots of little piggy banks to have immediate liquidity. At the end of the day, if they still don't have enough money, and they need money to pay those loans back, the private insurance companies are still on the hook to pay that money back. So it's a matter of immediate liquidity, not that we wouldn't have it. It would be, how long would it take to get? With this legislation, we should be able to get it much faster with, again, this is always with the Department of Insurance approval beforehand.
And those folks who are saying they're not seeing their money from the Fair Plan about the smoke damage, part of it was, and the ruling in the court changed some of this, but the Fair Plan language had something to the effect that it has to be perceptible, but if it's not perceptible and it's still borne out by a laboratory, that won't be covered. That's changing now, right?
That's changing. We used to call it the smell test, and it's literally the smell test is what they were saying. And that's not the way the law is written. That's not the way every other insurance company is held to the standard of. Fair Plan just didn't do it. They were told to change this language 6 years ago in a market conduct hearing. They just didn't.
Yeah.
So it's high time that this gets corrected, and I think people will start to see changes and getting money for these claims now.
So you said market conduct hearing, and this brings up now State Farm, which is under what we call a market conduct examination, an investigation by the insurance commissioner, Ricardo Lara, into some of the practices and all of what we're talking about with the payouts. Talk about what those examinations are, the teeth they have, and what we're seeing here with State Farm.
They have a lot of teeth, and State Farm is really getting the 1-2 punch when it comes to a lot of things. When you are under a market conduct review by the Department of Insurance, that's basically something like having the worst tax audit you could possibly imagine. They're going to go through every claim. They're going to go through diaries from adjusters' notes. They're going to look at justifications. They're going to look at internal memos and communications. They want to find out why there is a staggeringly large number of people complaining that, number one, they're not getting paid timely. Number two, they're not getting paid at all. Number three, they're not getting responses from their adjusters. And when you take all those things together in mass, the way you see, the Department of Insurance is going to step in there.
So what's the timeline on something like that? Because I just want to say, as we're talking about, and you're saying, hey, State Farm's feeling the pinch. Also, the insurance commissioner and the insurance department is approving a 17% premium hike for homeowners, and it varies for renters and et cetera. That was in May, and there's another one potentially coming down the pike too. So people are saying, oh, you're putting the teeth in, but you're also allowing them to charge more money. Speak to it.
Well, you know what it is? You have to keep the two things separate because you need to have money to pay claims. Period, mic drop, end of story. You also have to obey your contracts and your policies. They really are separate issues. I don't think that the Department of Insurance, if there was not a single complaint in the world from a State Farm claimant, would just start saying, oh, sure, take rate increases. They would